Today, we're going to break down a truly revolutionary idea from John C. Bogle's classic, The Little Book of Common Sense Investing. Seriously, this is a concept that pretty much turns the entire financial industry on its head, and it shows you a really simple but powerful way to build wealth.
Okay, so let's just dive right in with the big question, because honestly, everything else hinges on this. How you answer this one question is going to shape how you handle your money for the rest of your life. So are you playing to win, or are you playing a game that's actually set up for you to lose?
So here's the thing. Bogle's take is that for most of us, after you factor in all the fees, the costs, the friction of the whole financial system, beating the market isn't just hard, it's a mathematical certainty that investors as a group are going to lose. The whole system is designed to benefit the house, not you, the player.
And the core of his whole argument, the idea that kicked off what he called the index revolution, is captured so perfectly in this one simple story that he tells. It was actually inspired by his friend, the one and only Warren Buffett.
You're going to love this, because this one little story explains his entire philosophy. He calls it the parable of the Gotrocks family, and trust me, it tells you everything you need to know about how investing costs really affect you.
So just imagine this perfect world for a second. You've got this family, the Gotrocks, and they own everything, like 100% of corporate America. Every single dollar of profit, every dividend, it all goes straight to them. Their money just compounds perfectly. Everybody's winning together. It's a winner's game.
But then these slick, fast-talking helpers show up, and they start whispering to some of the cousins, "Hey, I can get you an edge, a bigger piece of that family fortune." All they have to do is hire these helpers, the brokers, the managers, the consultants, to pick the right stocks for them.
So what happens next? Well, the helpers start trading stocks back and forth between family members, and every time they do, they take a little commission here, a management fee there. The government, of course, takes a little slice in taxes. So now, the family is still fighting over the very same pie, but a huge chunk of it is being eaten by the helpers. The family's total wealth, it starts to grow way slower. And Warren Buffett just nails the moral of the story here. The more you churn, the more motion there is, the more those helpers get paid, and the less money is actually left for the investors. The family's attempt to beat each other actually just made them all poorer as a group.
Now that story is a great way to understand the concept, right? But Bogle doesn't just stop there. He backs it all up with what he calls the relentless rules of humble arithmetic. And when you see the actual numbers, well, they absolutely prove his point.
What's so powerful about this is how it shows you these two incredible forces at work. On the one hand, you've got the absolute magic of compounding returns. That's your money working for you over time. But then, almost like its evil twin, you've got the tyranny of compounding costs, just slowly, relentlessly eating away at all that magic.
And here's where it gets really crazy. Bogle actually did the math. Let's say you invest $10,000. Over 50 years, a tiny-sounding 2% annual cost creates a wealth gap of almost $180,000. That's the difference between ending up with over $294,000 and just $114,000. All that missing cash? It went straight into the helpers' pockets.
So this is the bottom line. Just look at who gets the bigger piece of your potential return. After a lifetime of investing, the financial system, all those helpers, can end up taking more than 60% of your earnings. Think about that. You put up 100% of the money, you took 100% of the risk, all for less than 40% of the reward. It's just unbelievable.
Okay, so the problem is crystal clear, and the numbers are frankly devastating. But the good news is, Bogle's solution is just beautifully simple. He uses this principle from way back in the 14th century called Occam's razor, which basically says, when you've got a bunch of different solutions, the simplest one is usually the right one.
And the simplest solution of all is the index fund. Instead of trying to find a needle in a haystack, the winning stocks, just buy the whole haystack. An index fund is just a big basket that holds every stock in the market. It doesn't try to beat the market, it is the market. You get rid of the helpers, you slash the costs. It's exactly what the Gotrocks family should have done from the start.
Now you might be thinking, well, if I just own the big S&P 500 companies, am I missing out on something? But check this out. This chart shows that the S&P 500 and the even bigger total stock market index basically move in perfect lockstep. I mean, a correlation of 0.99, the returns are pretty much identical. The point is, one simple fund can give you the return of the entire U.S. economy.
And look, this isn't just Bogle's opinion. Burton Malkiel, who wrote the investing Bible, A Random Walk Down Wall Street, he's saying the exact same thing. It's just a sensible, no-effort, super cheap way to get exactly what the market gives you. It's common sense.
So if this simple strategy is so great, how does it actually do against all those highly paid experts out there? All right, let's look at the actual data.
The results here are just staggering. Over a 15-year period, a stunning 95% of professional fund managers failed to beat a simple index fund. 95%! Your odds of picking one of the few winners ahead of time are just astronomically low. You're basically paying extra for the very high chance of doing worse.
And this right here just lays out the simple logic perfectly. Before you even think about fees, for every investor who does better than average, some other investor has to do worse by the exact same amount. That's a zero-sum game. But the second you subtract the costs of playing all those fees for the helpers, it mathematically has to become a loser's game for investors as a whole.
So how do you stop playing this loser's game? How do you make sure you get your fair share of whatever the market has to offer? Well, Bogle boils it all down to a winning strategy that is nothing but pure common sense.
Here it is, just 3 simple steps. First, own the whole market with a cheap index fund. Second, become obsessed with keeping your costs low, because every dollar you save in fees is another dollar in your pocket. Bogle has this great line, in investing, you get what you don't pay for. And third, just hold on. Let time and the power of compounding do all the heavy lifting for you.
And this might be the most radical idea of all. The entire financial industry is built to scream at you, do something, buy this, sell that. But Bogle's advice, which is backed up by decades of data, is the total opposite. Once you've got a good plan, the best thing you can do is often to just stand there. Let your businesses do the work for you.
And that brings us to the final question, the one you really have to answer for yourself. You're the one putting up all the money. You're the one taking all the risk. Knowing that all those helpers are just waiting to take a giant slice of your pie, how much of your hard-earned return are you really willing to give away to them? Your answer to that question could literally change your financial